everyone. Welcome to this week's episode of the Raising Millionaires podcast. I am your co-host, Roger Bryan, and that is...
Richard Lorenzen.
Richard, so today I have a fun topic. I've played around with investing in investment automation for years. Whether it was Betterment way back in the day, whether it was DCI using a genetic algorithm for asset allocation, or today in the AI arms race. But I think what I've been able to put together is a wireframe that I think I can have in beta in 2 weeks is pretty impressive. So I'd like to talk today about the use of AI in financial planning and how overall wealth management may be due for a massive transformation. How does that sound?
That sounds good.
When I say that, what's the first thing that pops into your head?
ChatGPT, financial advice, many things could go wrong. But at the same time, I can talk about how I use AI right now as far as like investing goes. I've found it to be a great tool for kind of just fact checking myself as far as like testing out different ideas for whether it's tax strategy, investment allocation, estate planning, to kind of a nice Swiss Army knife that's like a broker, an advisor, an attorney, a CPA all in one. But of course, it's not always accurate. So you need a fact check for your fact check.
Okay, so this is where stuff gets interesting. The reason, I'm going to take a step back and we're going to go general audience for a second. When you use ChatGPT, you are plugging into a general database of knowledge that is really just scraped internet content that is published back to you. What it's not is a private container of algorithms, strategies, and data that can drive decision-making while taking into account the rest of the world, but by eliminating those mistakes by giving it a fundamental formula to operate out of. That's a very generic way of talking about it.
Yep.
When you think about wealth management, though, there's not one formula for it. There is a formula for retirement when using cash flow real estate. There is a formula for retirement when using the 4% rule in annuities. Every single one of them has a different dynamic. So now, what does that mean? When you take AI and you create a container for each one of those philosophies, and you allow that philosophy to develop inside of that container without being distracted or convoluted by other strategies, you can start to measure the accuracy of that, and you can improve it by building in or layering rules. So here's the core idea. An AI platform that builds and manages multi-generational wealth plans tailored to each family's unique goals, financial acumen, and legacy goals. Think of it as TurboTax plus ChatGPT plus the family office plus life coach. So I started playing around with this, and I quickly learned how to containerize each of the early fundamentals, right? So setting up the right instruments based on goals for life expenses versus education versus retirement versus life insurance. And as I started to containerize it, and I put four containers all layered around a macro goal, and I watched how they individually processed data and then conjoined the data to put together a plan, all of a sudden it started to make sense. Now you can only do this through the API. You're not going to do this with just regular ChatGPT. You're using a low-code, no-code platform called Bubble.io, starting to build out the containers, starting to build out the LLMs, and starting to build out like the forms and the reports. I kind of had like a nerdgasm with it, because then I started to see is that once you have that basic workflow of like how somebody logs in, they give it basic information, how the information is shared across the containers, and then you map out all the different containers that could exist from every aspect of estate planning, wealth planning, investment strategies, debt allocation, debt repayment, and things like that. All of the calculators we've ever built, all of the content we've ever created, all of the books that we've ever written, all of a sudden started to align around this. I came up with this. I want to know your feedback. Our platform helps high-income families design a multi-generational wealth system using AI. From education funding to trusts, real estate to retirement planning, our system builds, updates, and manages a dynamic wealth blueprint that evolves as your family does. Here's the last kicker key. I didn't even let you respond because I'm too excited. This AI is yours forever. It's your personal assistant. You talk to it every day. It gives you monthly, quarterly statements. It plugs into your investment tools to aggregate and pull data. And as AI improves, as accuracy improves, as the engine has new layers of opportunity plugged into it, the whole engine updates for everyone that's using it. That's something that could not be done prior to AI. And all of a sudden, we've got this. It's like your own family office, I don't know, executive assistant.
Yep.
I
can't think of any
your
other
own personal CFO.
I can't think of any other tools that exist that do that yet.
I researched. I didn't see anybody that was either.
I can think of a lot of platforms who would probably buy it.
Well, and it was funny when I was modeling this out. You always model out an exit plan.
Yep.
And I think everybody would want this when it's done right. Here's the first core modules. I'm building out the early engine. That's where I'm learning how to do all of this. Mm-hmm. Then there's the family blueprint generator, builds a 3-generation wealth plan. There's a trust simulator that creates and visualizes multi-layer trust strategies. There's a wealth flow engine that simulates monthly annual cash flow projections. A legacy builder that codifies family values, mission, and long-term rules and scenario planning. It can model out divorces, lawsuits, early death, tax law changes. It can model out everything. It'll take time, but each time you add in one more module, one more engine, it becomes that much smarter. But this is not general population data. You've got to pull in a fundamental strategy and you've got to give it an algorithm or formula per module.
Okay.
And then they talk to each other.
I think the value, at least for me, the value in a tool like that would be the strategy that it could suggest more, plus the modeling, if that makes sense. Because
well, it does. It's like, hey, have you thought about doing this? Would you like me to model this out and let you know how it might work?
Like based on my income, my risk profile, my where I live, my life situation, how many kids, whatever, right? I would want it to say, well, you should be doing this from a tax standpoint to lower your tax drag. This is something you should be doing on the asset protection side. Like you need this type of insurance that you don't yet have to better protect your assets. So like suggesting different pieces of the strategy to create a more comprehensive, like bigger picture. To me, like, because that's what I'm saying. Like no other tool does that. There are a lot of tools that do modeling. We've talked about a bunch of them. But there are no tools out there that can help you build the strategy that creates a better outcome in the models. If you know what I'm saying.
I'm always playing around with this stuff and always looking for the opportunity. I even started to think about affiliate income streams because, right, it has a strategy, but then you might need a licensed professional to implement the trust.
Yep.
Or an estate attorney or a lawyer to do this, that, or the other.
Or tools.
Someone to buy the life insurance from, some broker to set up the 529 plan. So
it could be as simple as affiliate links with E-Trade and Schwab and brokerage firms, high yield savings accounts, all sorts of.
I wish they had affiliate links. Most of them don't anymore. I think there got to be a lot of regulatory problems. But here's the point. And it had 2 business models. The first one is a monthly SaaS, like $900 to $500 a month, depending on the layers of it. And the other one was high ticket builds. Like if you're a high net worth family and you want a custom standalone siloed data set that can't be interacted with or data pulled into other engines, right? 10K, 100K custom setup, and then you've got your own AI. Like, I get pretty excited.
I like it. I
started building it this weekend, so, and it says that I should be able to have the MVP out in 2 to 8 weeks, depending on how much I screw up as I'm building it.
Okay. I'll take it for a test ride, and
I'm kind of excited about this. It also talked about how the AI engine will know if the person using it is accredited to make accredited offers to them through the engine as recommendations without convoluting making offers to people that aren't qualified.
yep. No, that's important. If you're going to have it suggest like investing a syndication, for example, or doing early stage investing in a Reg D, right?
Oh,
Um,
I was going to have it recommend if they're into real estate investing, the cash flow real estate fund. But you're talking about all this other stuff. I'm talking about what we do.
yes. No, I like it. Is there a name?
Um, yes, I went through like 20 different ones, but we came up with the AI Family Wealth Architect.
AI.
That's not the market brand. That's kind of like the name of it. Where'd it go? Where'd it go? You notice how I talk about AI in the context of we?
Mm-hmm.
It's kind of weird. Yeah, we just called it the Wealth Architect.
The Wealth Architect. I like that.
And it could be Family Wealth Architect. It could be Wealth Architect AI. Right now, it's a product being offered by Block Capital.
Wealtharchitect.net is available right now for 1 penny.
That's because it's .net. I think I'll beta it inside of Block Capital just to continue to build that brand. And
Yeah.
once it's got a little bit of legs and we've got a couple people using it, I think that it can be spun out. I mean, names you can spend a year on, or you can just spend 5 minutes and buy one.
Wealth Architect says it all.
It does.
Uh,
Well, you
there
know
is
the problem is now that we're talking about this, if we're going to buy a freaking domain,
you got to take action right now.
Yeah.
There are some competitive names out there on Google.
Yeah, wealtharchitect.ai.
.io is available.
Ooh.
$60.
I'm gonna think about that while we're on the call because damn it, now we have to buy it.
Mm-hmm. Don't worry. By the time we remember to upload this episode,
True. Although I did make a ton of progress on the website.
yes, it is coming along. We talked about
Yeah,
that.
and then
So,
ran into one problem with one of the calculators that we're fixing. And then even though I abandoned my fund management platform because the developer was taking too long, I messaged him this week and I'm like, just finish the damn thing so I have some type of login and user base that I can launch other tools and stuff to. So hopefully I'll get that done.
okay.
All right.
All right.
So, you know what's funny is that, I mean, I'm not in great shape, but I bought one contract for CoreWeave. We talked about it on last week's call.
Right. So you were gonna short. You're gonna buy puts on CoreWeave based on the upcoming earnings call for
NVIDIA
NVIDIA,
earnings.
which is tomorrow.
And even though the stock, like I bought it when the stock was at 110 and then it dropped down to 95, but it did it in pre-market and then shot right back up. I think this would have been Thursday or Friday. Now it's back up at 120. I'm not as far out as I thought it would be, which means there's still a lot of expected volatility still, man. Like,
Well, you're seeing a pop this morning based on partly anticipation of earnings and just speculation. And you're also seeing a pop in the broader market because over the Memorial Day weekend, the Trump administration announced that they were pausing potential tariffs on the EU. We also had some good prints come across this morning. The consumer confidence number came out higher than expected. So there's a lot of upward. The whole market's up. The Nasdaq's up like 2.5% right now. So
now, the only thing that really, not the only thing, but one of the things that really worries me now about the conversation around NVIDIA earnings, and even if they're weak, this new concept of sovereign AI with the huge investments that Saudi Arabia, the UAE are making. it's interesting to see an American tech company become a political player. But I mean, we're talking hundreds of billions of dollars, right? They could come out with the worst quarter, like more than imaginably bad, but still forecast, hey, we've got $200 billion in contracts signed
Yep.
for the next 24 months, and the stock could pop. So I don't know, like, I'll let I bought one contract. I'm just gonna let it play out. I bought it early. I bought it too early, and that's the big thing about today's market, right? All the fundamentals can be there for the individual play, but the geopolitical and having a government that's driven by I don't want to call it capitalism because that would be wrong, but it's driven by deal making, not politics, which is very different than anything we've ever seen in our lives. You can't, the fundamentals don't matter. Is that what the end result of that is?
I've talked to a couple different traders over the last 2 or so weeks that all think that the AI trade could be back on again for its next leg up for a number of different political reasons. And so, yeah, I think that that's a good assessment.
Well,
That doesn't bode well for your put position against CoreWeave, but
it doesn't, but
so
I mean,
so
CoreWeave
CoreWeave,
is still way overbought. I mean, it's way,
so the stock is up right now 16%.
that's just
Uh,
today.
that's just today. The stock is up 16% today. Like I said, there's a bunch of different variables that are driving it, as well as the broader market today. But the main event, kind of the main event, the NVIDIA earnings call has yet to take place. That's tomorrow. And so there's a lot of volatility that could take place between now and 4 p.m. tomorrow as everybody tries to game what direction they think the stock is going to go in based on earnings, based on political headwinds, and a bunch of other factors. So,
I am going to watch from the sidelines on this one. Hold on one second. What did I do?
broader market is looking pretty strong though today. I mean, markets are up. VIX is at $19.
Oh, wow.
19. And treasury yields have kind of come in a little bit, which was good. They really needed to take a little bit of a breather. The 10 years at 4.4 roughly right now, which is down from being a little over 4.6 last week.
Have you ever thought that maybe the administration is trying to drive up treasury yields to get the Fed to cut, right? Like they keep saying that they keep doing all this crazy stuff.
I think they're doing a number of things to try to push the Fed to cut, so that it could just be yet another thing that they're doing to try to drive the Fed target rate down. Um, I mean, it's no surprise after the tax bill passed the House of Representatives last week. The tax bill is projected to add what, $3 trillion to the
I thought it was
so
more like 4 trillion.
so it's not a big surprise that you're seeing a spike in treasury yields as a response to that, especially after we were just downgraded by Moody's a few weeks ago. Um, but yeah, I do think that I think that the administration is doing a number of different things to try to get the Fed to lower rates because they've stated very plainly that that's what they want them to do.
Oh, it's all intentional. Do you see the Trump family is now going out and raising like $3 billion to buy crypto through Trump media?
I did see a headline about that.
I wonder how much of that comes from sovereign wealth when we get our free airplanes and stuff.
Well, how are they structuring that fund though? Did you read into that at all? Like,
I did not, because I know as a crypto enthusiast, the expectation for legitimacy that we thought that this administration would bring is not there. In fact, if anyone's running over any of that, it's them with all of the stuff that they're doing, like their dinner last week for Trump coin holders. But they are kind of like, it's like a I don't know, double-edged sword, right? They're doing whatever the hell they want. Is that blazing a trail for where regulation is going? or if we follow, are we going to get stepped on, even though we're doing exactly what they're doing? Does that make sense?
Usually it's the second one.
Usually it's the second one, but you figure we got at least 3.5 years to do stupid shit before the next administration comes in and has to clean up.
True. I mean, everyone was waiting when the new administration got started earlier this year. Everybody was waiting for the sovereign wealth fund to make an announcement that it was going to be buying a new strategic reserve of Bitcoin, which obviously never came to be. That was the first big blow, I think, in terms of this administration being kind of a champion of Bitcoin, at least in the way that the industry thought it was going to be.
I'm still waiting for the day where the Trump administration comes out and they've been doing all this deal making, and they're like, we would like to introduce you to the new U.S. Sovereign Wealth Fund. We now have $5 trillion in assets in it. We've got $400 billion in rare earth from the Ukraine. We've got a $200 billion investment in Saudi Arabia. Oh, by the way, we drove down the stock market and bought up 10% of Tesla, right? It would go against every element of ethics. It would go against every element of expectation of government function inside of the investing environment. But I wouldn't put it past them, right? The way that we're going to get ourselves out of debt is we're going to build a sovereign wealth fund that's greater than the debt in value.
That's true. That's true.
Do you think that would ever happen, or am I just making shit up?
I don't think we're currently moving in that direction.
Come on. They've got to be doing something behind the scenes that actually makes sense, not telling us. No?
I think that would be an amazing portfolio if
it would be. Like, put Greenland in there. Like, whatever happened to that? Did we already buy it and nobody told us?
I don't know.
It was crazy, though, like, to think that Denmark pays $500 million a year for the rights that we want. Like, why couldn't we write a check for $2 billion, right?
Mm-hmm.
But the amount of rare earth metals and natural resources that they're supposed to have there, I don't know. I think it's just wishful thinking.
Yeah, I don't think we're heading in that direction at the moment. But it is a good question of the sovereign wealth fund. How are they going to structure that in a way that it does become kind of a deficit fighting mechanism for our balance sheet? I don't know.
Like I said, you put Denmark in there, you put the Ukraine in there.
Canada.
We'll just pile in a bunch of countries. And in no way does that have any representation of my personal beliefs or anything to do with the people of those countries. Yes. It's just stuff that Trump has said in the past, right?
Yep. The Bitcoin conference is this week.
Miami?
In Miami, or yeah, I guess it is in Miami or in Vegas. I don't remember which one, but
people are telling me they're
Bitcoin. It's in Vegas. It's in Vegas. It started today. Who is speaking? JD Vance is the keynote speaker, along with 2 Trumps and some of the usual players. Saylor.
Ooh, Square announced that they're going to start accepting BTC payments. Not that anybody really wants to use Bitcoin for payments. Man, 25,000 attendees now at that conference.
It blew up last year when Trump did the keynote speech. And now Don Jr. and Eric are going back this year. JD Vance is the lead speaker. We've got an interesting assortment of people. David Sachs, of course, is going to be speaking. The White House crypto czar, as they call him.
Oh, I finally got my ad into review. Woo! I've been fighting with that since Sunday. Just so everybody on the call knows, like, we have regular businesses too, and we've got to market, we've got to sell, and we face all of the struggles that entrepreneurs face every day.
Yep. Any new trades that you're loading up for the coming week?
No, I think if anybody that's been listening to the calls, I primarily focus in on one trade, and I focus in about a week out, and then I just watch, and I look for it to see if the news and the price momentum moves in my direction. And CoreWeave did not.
No.
Well, with that being said, CoreWeave did kind of, because we talked last week that I would make my play today, right? And the volatility is still there. The premise for NVIDIA from a business fundamental is still there. The problem is the sovereign AI conversation has really brought massive amounts of new funding to the table. And all the, what's his name from SoftBank?
Miyoshi-san?
Miyoshi-san, and everything that he's trying to do with the roll-ups of AI. I am too worried that fundamentals in a down quarter will be overridden by the potential deals that are coming. Not enough to go long. Actually, where's NVIDIA at today? I'm so focused on CoreWeave. NVIDIA's up 3%.
Yeah, I mean, it's interesting. It's not anywhere near the kind of run that CoreWeave is having, but it's up 3%. It's going to bounce all over the place ahead of they report tomorrow after the closing bell.
Yep.
So it's going to bounce all over the place as traders kick it around.
It'll be fun to watch, but I think that like where I saw CoreWeave being and where I saw it going, I would prefer for it to be under 100 right now. It's skyrocketed too much, and that doesn't mean that that's reinforced my premise of downward momentum. That stock's not under control. Like, right? I don't know where that thing is going to go. What's its P&E? It's a negative.
For NVIDIA?
No, for CoreWeave.
Oh, for CoreWeave.
It's got a negative 45% profit margin, and its PDE is negative 60. But it's just, you can't stop it.
I mean, the broader market feels very overbought right now. And I was saying that before we had our 3% move up today. So where I'm at right now is because I do have more money that from the past couple of months now that needs to get put to work, and I just haven't gotten an opportunity, and I didn't buy enough during the dip that we had in April.
You never buy enough during dips, and you never sell enough when it's at the top, right?
Exactly. But now it just feels like a crime to just keep adding more and more. So like I'm sitting on more cash that needs to get put to work. And where I'm at now is I'm just going to try to stay patient through the summer and wait to see when we move down a few percent again. Because it just keeps moving higher. It feels very overbought at this point.
I started testing a new strategy too from a financial planning perspective. This has nothing to do with wealth management. This has nothing to do with the AI tool. That has nothing to do with early. But I started looking at like different pockets of assets or potential assets. Let's think of it like this. Like the e-commerce business is worth this much. It could be worth this much in this amount of time if this happens. And then I boxed out 4 of those categories, and at the end of each one, I put in a massive real estate investment, right? If I'm at that point now where I'm about to be 47 and I'm starting to look at, it's funny, I don't know why all of a sudden I want to lower my risk horizon now, but moving more of the money that's invested into small businesses or non-controlled assets or even equities, and putting it into real estate to start to build out a larger cash flow engine for more freedom, security, and things like that. I built out 4 of those buckets and aligned it out. I'm like, ooh, now I can see the levers that I need to pull in each of the businesses to get them to a specific point so they can transition into those. And like, for me, it's like the next December 2026, I think is going to be a big transition point for me when our fund my last fund closes after 5 years, and how I want to reallocate everything around that. And it was an interesting exercise that I worked on.
And so you're looking at real estate primarily, pivoting a lot.
Just the pure cash flow play.
Pure cash flow play.
100% bought and paid for real estate, so that on day one, what is that Grant Cardone commercial? We have positive cash flow on day one of closing. I don't sound like him, do I? That was bad.
Interestingly, there was an
He's got
article
that
in
twin,
Barron's
though.
over the weekend. Yeah, he does have a twin. There was an article in Barron's this past weekend talking about residential housing prices, and it noted that one of the strongest markets in terms of appreciation is the Midwest because of strong economic growth in the region and still just a shortage of supply that isn't getting any better. And so, as opposed to like certain areas like Texas and Florida that got very overbought over the last couple of years and are now seeing price corrections, the Midwest it predicted to be one of the more recession resistant, I guess you could say, markets where they don't see much of a decline in pricing coming. It looks like it's going to continue to hold up pretty well in terms of appreciation.
Yeah, and I think the balancing act with that is, especially in this like very localized market, is there hasn't been a ton of building since pre-COVID, right? You would like there's strong demand, but then interest rates shot up, and the ability for people to buy at the level that they want just isn't there, so they're not doing it.
Yep.
Interest rates would have to come down back below maybe 5% to move the needle, but below 3% to really move it. And I don't see that happening anytime soon,
No.
like not in the next 3 to 5 years. And now real estate is a long-term horizon, so I wouldn't say that looking 3 to 5 years out is what I would use to make a decision. But even if I look at my lifetime and I look at like when my parents bought their first home in like 1980 at 13.5% interest, and then I look at the average interest rates over my lifetime, 3 to 5% is not average. That was uniquely low, and we may never get back to that. So that means that you have to almost wait for a generational mindset, not a generational mindset shift, but a generation of people to get over the fact that those were the rates and stop waiting for them to be that again and start doing things at 6, 7, maybe even 8% with the direction that we're going on the 30-year. It's just going to take time.
Well, part of that is also if you zoom out of just housing prices and you look at the broader economy, take like 1980 something, for example, buying a house at 13% interest, there was also a smaller gap back then between housing payments and things like
Salary.
wages.
Yeah.
Exactly. And so in some ways at 13%, houses were still more affordable
They
on
were.
a wage adjusted, inflation adjusted basis than they are now.
Now, I would have been 2 in 1980, so I don't know what my dad's income it was. I remember, I think that home price, right, was like $26,000. And that same house today sells for $250, so 10x in 45 years. But I bet you his income was 26 to 35, maybe more. He was the general manager of a national tire chain, like just that one location. But he was in that upper blue collar sphere, so it could have been a 1-to-1 ratio. And if you think about that today, a starter home in this area is $250,000. And you're not getting a 1-to-1 ratio. Most of those people are making 50 to 70. So that spread that you're talking about from a 1-to-1 to a 1-to-5 is what makes housing so unaffordable, which also is what makes multifamily so attractive for investors.
Yep. Yeah, the point being that even if rates were to come down, or let's say they stay where they are, they come down moderately to like the 5% range, even if that historically looks good on paper, if people just can't afford to buy it,
There was, I think this was on NPR, not CNBC. This was like 2 weeks ago. I forgot about it. There was a National Realtors Association bill that died in the House where they were trying to get a tax window for investors who hold large portfolios to be like, there's a whole bunch of baby boomers that hold huge real estate portfolios that won't sell because of the capital gains tax and selling. if
Yep.
they were given like a 1-year window to sell that in order to alleviate some of the stress on the housing market, we could see a huge price decline in a lot of investment properties. I don't remember, but it was something like 17%. There's one, most people think that it's these huge corporations that own all these homes. Like the big multinational corporations own like 1.5% to 2% of the US housing market.
Yep.
The families that own like 10 houses, 5 houses, 4 apartment buildings hold 17% of the real estate in this country. Don't quote me on that. I would have to look it up. This was from like 2 weeks ago, but I think I'm pretty accurate. So if you think about that, not that every one of them would liquidate, but when you look at the trillions upon trillions of dollars in wealth that the baby boomers are holding that they want to pass on or they want to liquidate or get access to, that tax holiday on that would be a boom for the realtors. But it could be a bust in prices, which would also be good for new investors that want to come in. But it died. Like, I don't think it ever got legs whatsoever. And I don't see that being something in the Trump administration, although I don't know.
Well, particularly when it comes to like starter homes, that's where I think some of the tightest supply is, or the biggest bottlenecks in the market. Starter home here in New York for a minimum of $600,000 to $700,000, and at a 7% interest rate, like it's hard for people that are in their 20s to buy that, right? And so.
Well, I mean, the dynamics here as well. Most of the 20-year-olds, even if they're fresh out of college, maybe they make $50,000 or $70,000 a year. But a starter home here, an older home $250,000, a newer home $350,000, a fresh build $500,000 to $600,000. Now, I mean, these are nice Midwest homes, but still, right? 10 times your earnings doesn't work really well.
Yep.
All right. Well, thank you everybody for joining and listening to us blabber on like we like to do sometimes. If you liked what we talked about or you have any questions about it, and we actually ever got this posted, comment below so that we can talk to you about this. Feel free to reach out. If you want to get copies of any of our books, calculators, anything like that, we'll be happy to share it with you. And we look forward to seeing you next week. Richard, any final thoughts?
I have nothing to add.
Okay, you were already reaching for that shut off button.
All
Talk to you
right.
later.